If you'd like to earn CPE credit for listening to this episode, visit earmarkcpe.com. Download the app, take a short quiz, and get your CPE certificate. Continuing education has never been so easy. And now, on to the episode.
This is Oh My Fraud, a true crime podcast where the bad guys make up numbers instead of alibis. I'm Caleb Newquist.
And I'm Greg Kite.
Hey, Greg. Do you remember your first computer?
I absolutely do. It was weird. I was just talking about this like a few weeks ago. For some reason, my first computer was called a VIC-20. I think, and if I'm remembering right, it was
wow. I've never heard of this.
You've never heard of it?
I don't know. We'll get to my first computer in a minute.
Okay. Well, I'm pretty sure it was like the computer was built. It was the early 80s. The computer, I think, was just built into this massive keyboard, and you plugged that massive keyboard into a television, and it had here's the stat. I looked these stats up. My VIC-20 had 20 kilobytes of ROM and only 5 kilobytes of RAM. Yeah, and I just checked, and the computer that when I was at work, I checked, and my work computer has 16 gigabytes of RAM. So that's 16 million kilobytes. So I started with 5 kilobytes. Now I have 16 million of those. My work computer has 912 gigabytes of storage.
Good Lord.
And that's that. And I only had 20 kilobytes of ROM. And ROM isn't the same as storage, but I'll tell you, I got so much more storage than I used to have ROM, even though I don't know what those things are or what the difference is between them. But damn, I have so much more gigabytes of something than I had of a different thing when I was a child.
You have an abundance of whatever it is that you have.
Yeah. Oh, here's another thing about my VIC-20 is forget about the cloud. On my VIC-20, we saved whatever our work was that we were doing on our VIC-20. We saved it on, I shit you not, a cassette tape. We had a cassette tape recorder, and we somehow saved our work to a cassette tape. And I remember doing exactly two things on our VIC-20. I remember playing a game called Amok, which was pretty cool and pretty hard, and I sucked at it pretty bad. And then I programmed like 3 lines of code in BASIC, and that was it.
That's pretty cool. Yeah, I remember my first. I mean, maybe. I mean, my first computer was a Commodore 64, and I loved it. In fact, I recently saw an old picture of myself sitting in front of it playing video games, and I had a bowl haircut naturally. The Commodore 64 had those 5 1/4 inch floppy disks.
Yeah.
And I remember, I mostly played video games, although I think we did some worky thing. Let's not kid ourselves. I mostly played video games.
Right.
But, the video games were on a floppy disk, and, you'd put it in the disk drive. And I remember when it was loading, that green light on that disk drive would be on, and under no circumstances was I to touch that disk drive. And I sure as hell was not supposed to remove the disk from the disk drive while that green light was on. And I never had the guts to find out what would actually happen if I did. The red light and the nasty sound that it made when something was going wrong without me touching it was enough to put the fear of God into me. So I just never found out.
Right.
And I just have to say, as of this recording, I am 43 years old. And when I stop to think about that, I think, holy shit, I'm middle-aged. And also, I think computers have really changed a lot in my lifetime. Yeah. Specifications are not something that I I know what they all are. But my iPhone is a ridiculously powerful computer compared to that Commodore 64. It's not even close, right? And I mean, I'm stating maybe things that are really obvious, But it's just kind of amazing to me when I think about that Commodore 64 and how much I loved it and how much I played in those games and just like what they're capable of now. And I think I mostly feel frustration with computers now, and there's almost no joy anymore. All the joy is
right.
gone.
The other thing that we didn't have back then was we didn't have Twitter, obviously. And if we wanted to access any hateful shit like they have on Twitter, we had to go all the way to the public pool or the roller rink and read the stuff on the stall door in the boys' bathroom. That was our Twitter.
Yep, pretty much. And so in this episode, Greg, I think it's kind of fun. We're going back in time when people were just starting to figure this stuff out. They were just they were just figuring out personal computers. It's kind of a weird thing to think about because these days we don't even think about this stuff. But people had to figure it out. Like they had to build the things and the hardware, and that's what today's story is about.
So if you think that Stranger Things is awesome because it indulges in the nostalgia of the 80s, but also has nerdy stuff like Dungeons and Dragons, but you think to yourself, I wish it was just a lot nerdier, today's episode is for you.
All right. In the early 1980s, personal computers were still not a thing for most people. They were really big, physically big, and they were super expensive, and they weren't easy to use. I mean, not like computers of today. Like I have a 2-year-old, and like she picks up my iPhone, and she instinctively knows what to do. Like it's frightening, actually. But as most people know, I don't know if most people know this, but you tell me, Greg. You're kind of you maybe have your finger on the pulse of these things, but one of the most critical pieces of any computer is the hard drive. Do most people know that? I don't know if they know that.
I'm going to concur.
Yeah.
Even a dum-dum would go, yeah, that sounds right. And I'm a dum-dum,
right.
So I'll go, yeah, that sounds right.
Right. So a hard drive is a part of your computer that stores stuff, right? Like documents, pictures, programs, whatever. If it's on a computer, it goes on the hard drive, right? These days, hard drives, they store a lot. In some cases, like 1 or 2 terabytes. That's a shitload of storage. But how much is that exactly? Well, keep me honest here, Greg, and I know you will. There's 1 trillion bytes in a terabyte. Is that right?
Yeah. Yeah, that's right.
Okay.
1 trillion bytes. That means 1 terabyte of memory equals a whole lot of VIC-20s, like millions of VIC-20s.
But like when you think about stuff that commonly people have, they store on their computers, like that's like 100,000 songs. Like 100,000 songs is kind of, it's hard to get my brain around just how many songs that is.
Yeah.
But like 100 movies, 100 movies is a little bit easier, but those files are super big, right? And so if you could put 100 movies on your computer, like how many times could you travel around the world with a 5-year-old? I mean,
right. Several.
Yeah. The entire Disney catalog.
They'll one of those movies and watch it 100,000
right.
times.
So just watch it the whole time.
Yeah, exactly.
So hard drives have actually been around a while though. Since the 1950s or so. But they were physically large and super expensive. And the first ones were created by IBM, but it wasn't until the 80s when hard drives started becoming actually part of a personal computer, personal home computers for the first time. And one of the pioneers of hard disk drives was a guy by the name of Terry Johnson. Johnson was born in Ogden, Utah, which is your neck of the woods, Greg.
Right up the street from me.
Yep. And he became an electronics technician in the Navy after high school. Then he studied electrical engineering at the University of Utah, and then later got a master's from UC Berkeley and went to work at IBM. He had a short stint at Memorex and then finally joined a startup called Disk Systems. And primarily he worked in things like storage, like he was building things to store data. And this Disk Systems, this last place where he was, that was eventually acquired by a company called Storage Tech. And in 1980, he left Storage Tech and a short time later founded a company called MiniScribe to start manufacturing hard disk drives, because there was basically only one company at that time that was developing hard disk drives, and it was a company called Shugart Technology, which is today known as Seagate. And MiniScribe was like, one of the second companies to kind of be in this space.
Yeah, because you gotta. I mean, it's America, and you gotta have that competition going. And with, I mean, and even that is a little bit reminiscent of like the legendary startup stories that we all think about, especially in the tech world, because there's that where it's like, there's this new area it's not so much that it's ready for disruption because it just started, it's ready for competition. So people move in. That's your, Uber was amazing, so enter Lyft, that kind of idea as well.
Right.
But then also Johnson started MiniScribe out of the basement of his home in Longmont, Colorado. And it was just him, and it was one other dude who was a designer. He didn't even have a degree. And this was according to Terry Johnson's oral history from the Computer History Museum. You want to talk about a hot date? That's going and listen to oral histories at the Computer History Museum. And
because we know our audience, there's a link in the show notes, so you can read the whole thing. Yeah.
Exactly. With your date. Apparently, Terry Johnson had tried to get, when he started his business in his basement, he tried to get about 10 employees, and he tried to steal them all from Storage Tech, which was his former employee. But on the Monday, they like all planned this out, and they were like, hey, on Monday, everybody, we're all going to quit, and we're going to go start our new thing. And on that Monday, all but one of the 10 people that were supposed to walk out with Terry Johnson, everybody else was like, yeah, I think we're good. And so he and his one knucklehead buddy were like, oh, just us? Okay, I guess it's just us. But they went and they did it, and they started, him and his designer, they started MiniScribe. And
go ahead.
Well, at one point in the oral history, the interviewer recalls visiting Johnson's house and watching everyone working on everyone, I guess meaning Terry and his one lackey.
If I remember this right, there was a few more guys by this point, but only a few guys.
Yeah. But the crux of the story was they were building their first hard drive on the pool table in the basement of Terry Johnson house. Again, just iconic tech startup shit.
Yeah, very much so. And there is another one of these early employees was a guy by the name of John Squires, and there's an oral history of him also in the show notes, because he had some fun stories around this stuff. And if you really want to go down and if you want to get nostalgic, read those oral histories from the Computer History Museum. But anyway, so Terry Johnson and his ragtag team completed what would become known as MiniScribe 2. So I jumped ahead a little bit. They did come up with a prototype, which was MiniScribe 1, but MiniScribe 2 or MiniScribe 2012. And if you're really into this stuff, like I said, you can there's a link to the brochure. We found a brochure for the MiniScribe 2012, and that's in the show notes if you want to check that out. But anyway, it was this product, the MiniScribe 2012, with 12 megabytes of storage.
What?
12
megabytes?
Yeah, which was like groundbreaking at the time.
That's badass.
Yeah, it was badass at the time, and that put them on the map. And IBM put it into I think it was their second personal computer. It was the XT, it was the second personal computer that IBM had put out. And so that was obviously a big deal.
Right, because that computer went on to win Jeopardy. And
that was the one. Oh,
that was the one. That was the first. They had so many robots just were winning Jeopardy. They made so much money just for the robot uprising.
That was IBM's main revenue stream.
Jeopardy cash. It helped put them in the black every year. Some retail companies look forward to Black Friday. IBM looked forward to Thursday nights with Alex Trebek to get into the black. But yeah, it was that deal. I mean, all that was bullshit, obviously, but it was the deal that MiniScribe made with IBM that paved the way for MiniScribe to do their own initial public offering in late 1983. Caleb, 1983. You were probably in elementary school at that point.
No,
Maybe?
not quite. I was a little bit old for my class, so I was probably it was probably 85 when I started kindergarten.
Okay, gotcha. Yeah, I was solid middle elementary school at that point.
Oh man, the awkward years, huh? No,
awkward
you were one
years.
of the cool kids?
That implies that there have been some that weren't.
that they've ended.
Right, so just normal for me.
Yeah,
all of them normal. Same.
Yeah. So MiniScribe, they get this big deal with IBM. And yeah, the IPO came together like quick, right? So remember this company was just founded in 1980 or thereabouts, and they do an IPO 3 years later. I mean, that's by standards these days, like it's totally different, right? Companies if they had a viable business model, like going public was a really good way to raise money. And so they had this big deal with IBM, and IBM was like one of the biggest companies in the world, at the time.
Right.
Yeah. But fast forwarding a little bit, by late 1984, IBM's sales of their XT personal computer, they weren't going great. They kind of overestimated the demand. And so they scaled back their orders of MiniScribe's hard drives. And this led to layoffs at MiniScribe, a plummeting stock price to the point that they suspended trading. And although he claims it was unrelated, it was around this time that Terry Johnson also resigned from MiniScribe as its CEO.
I don't care where you live in the United States. If you're a CPA, you have to take ethics continuing education. And I don't care who you are and where you live, you hate taking ethics continuing education. That's why me, Greg Kite, and my buddy Adam Browd, we created a podcast called Drunk Ethics, where we unfold and expose all of the inner secrets of not just ethics, but how to become more ethical and to promote ethical behavior at your workplace. And we do that while we are getting progressively more faced during the course of each episode. In each episode, we take 7 shots every 7 minutes. And so at the beginning, we are scholarly, and by the end, we are drunk yet still scholarly. If you're interested in this podcast, which I know you are, anyone can listen to the podcast for free. It's out there. You can find it. But if you want CPE credit for it, NASBA certified CPE credit, it is a premium course on Earmark. So if you're already a subscriber to Earmark, it's going to be more than that. But listen, it's worth it because of 2 reasons. First off, your company, your firm's going to pay for it and not you. And second of all, it's worth it. Damn it. So Terry Johnson bailed on MiniScribe because he was so disappointed with the I don't know. I'm assuming this is all speculation. He was so disappointed that his baby that was failing in the market or not doing what he wanted. So he bounced out. So there was a guy named Roger Gower. This guy had recently been hired as MiniScribe's president. He also became the CEO to take over for Terry Johnson. And Gower's tenure was very short. MiniScribe received about $20 million in investment from Hambrecht and Quist, which was an investment bank. You guys remember Hambrecht and Quist from the mid-1980s, of course.
Of course.
And yeah.
We're going to get emails about that.
They are.
Somebody's going to be like, actually, I worked very closely with the guys at H&Q. Thank you very much.
Right, exactly. I still work for them. It's a very powerful company. You might know them now under their new name of Apple. I don't know. But Hambrecht and Quist was in some cases cited as a venture capital firm back in the 1980s. and they had a successful track record of funding technology companies. And again, we're talking in the 1980s, so cutting edge technology like the wheel and the door. So, Hambrecht and Quist, they went ahead and they installed one of their executives to replace Gower. So the guy that they installed, his name was Quentin Thomas Wiles, or as he was known on the street, QT Wiles. And he was the new CEO of MiniScribe. And Wiles, QT Wiles, he had this reputation of being a turnaround specialist. So he'd take these crappy companies and he'd make them amazing, to the point where his nickname, the people on the street, if they didn't call him QT Wiles, they called him Dr. Fix-It. So
there's something very, the name QT, like somebody that would actually walk around with that name would definitely also be the same type of person that'd be like, yeah, some people call me Dr. Fix-It. I'm like, is that right? QT?
Right. So QT Wiles, Dr. Fix-It, he had this whole thing going on, this turnaround machine, which included a management team that was largely made up of all of these CPAs. But the main guy in this team that you need to know about is a fella named Patrick J. Schleibaum, and he was the CFO of MiniScribe. So Dr. Fix-It, CEO, Schleibaum, CFO. Now, Dr. Fix-It, QT Wiles, had another reputation too, beyond being a turnaround specialist. He was like super intimidating, high pressure. That was what he was known for. His strategies in these turnaround situations, Caleb, was to make deep cost cuts, to restructure the firm into autonomous divisions, and to set very aggressive sales targets. So there was tons of pressure within the organization to hit the numbers, because that was how a lot of the executives' compensation was based on whether or not they hit these targets, these aggressive targets that Dr. Fix-It put in place for his people.
Yeah. I mean, you don't get a name like Dr. Fix-It if you're just, kind of pussyfooting around and like,
if you're not fixing stuff.
Yeah, you got to be fixing stuff.
I know. So naturally, this drove a very competitive environment, as you would expect. And MiniScribe's sales grew from just over 113 million around the time of its deal with IBM to over 600 million by 1988. That's about 5 times. Is that right?
That's some big
Is my
growth.
math right?
Yeah, about 5x, right?
It's about 5x.
It's a little more than 5x.
The company, MiniScribe, they had operations in Colorado. That was their home base within the United States, but they also had operations in Singapore and in Hong Kong. And during this time, MiniScribe was recognized throughout the financial sector for its growth and being one of the best managed companies in the hard disk drive business.
In January 1987, MiniScribe personnel were doing an examination of their inventory prior to a review by their auditors, who were Coopers & Lybrand, which is, of course, a predecessor firm of PwC. And that Coopers was coming in to do, the audit, the year-end audit for the 86 financial statements. And during this kind of routine examination of the inventory, the count came up a bit short, between $2 million and $4 million bucks. And
so just a pinch, just a little off.
It's a few million, $2 to $4 million.
Yeah.
So, but what does that mean, right? It means that they actually have. We'll think about it. We'll try to explain this in practical terms, right? But what it means is that they actually have less inventory than what they say is on the books, right? So your books say one thing, and the guys go into the warehouse and they count up all the stuff, and they're short compared to the books by $2 to $4 million, right?
Yeah. Yeah.
Okay. Now, this could be explained, I suppose, a number of different ways. It's accrual accounting after all.
Yeah.
But the bottom line is that this shortfall suggested that the cost of the drives that they sold were more expensive than they thought.
The actual costs of the drives.
Yes. And to extend that one step further, it means the difference between the price they sold the drives for and what they cost, the difference was actually smaller than what is on the books. So in other words, so the accounting and finance people out there know what we're talking about. We're talking about gross margin, right?
Right, because on the books you do this. You're not actually tracking the cost of goods sold. You're saying what was the beginning inventory for the year minus the ending inventory for the year, and there's more to the equation because you have to factor in
purchases
and all that sort of stuff. But basically, if you're saying you have a whole lot more value in your inventory, then you're saying we had a whole lot less value in our cost of goods sold. So we're deducting less from our top line. So if you deduct less, you have higher profits. It's showing.
And so if you have a shortfall,
showing a lot more
they're showing a lot more gross margin than reality, right?
Exactly. Yep.
So, Greg, you are in this little team here. You day to day, you still crunch numbers for a living. So let me ask you, in this, if you were in this situation, what could you do? Like if you run this business and you have this inventory and you go in and you count the inventory and you're like, we're missing like $2 to $4 million in inventory that we say is on the books. So what would you do?
Right. But I'm like a legit, like not fraudulent.
Yes. Okay. I'm asking, yes. Like if you were, what would you do about this in a what action would you take that is
as a good
not
guy.
Illegal? As a good guy. Yes.
Gotcha.
Right.
Okay.
Right. As a guy who is obsessed with making the numbers right.
Right. Yeah. Yeah. If it was me, so if I think about that going, oh my gosh, we just did an inventory and the numbers are way off of what they're saying there are in our financial statements. The immediate thing I would do is I'd do another inventory count. I'd think, okay, we must have done something wrong with our inventory count. Because
you're off by so much.
So it's just like, okay, let's do it again. And then assuming that after the second inventory count, it came up short, the next thing I'd do is I'd review our assumptions, because typically when you do an inventory count, you don't actually get to count every last item in inventory. You make certain assumptions, you do samples, and then you project that to be your entire inventory.
Extrapolate the results.
Yeah, exactly. So I'd review those assumptions to make sure that there weren't any, that nothing had changed in terms of the structure of our inventory, things like that. So I'd make sure my assumptions were correct. And then if even after I reviewed the assumption, those are still valid assumptions, valid ways to extend the actual count to what we're looking at, to projecting what our total inventory is, then I would have to go back and do a more thorough physical inventory and either actually count every last goddamn item inventory that we had, or short of that, you'd at least make it so that you counted more inventory, because the larger of a sample that you have, the less that you're relying on your assumption, or the more accurate your assumptions become with the larger sample that you have of actual counted inventory. And then if I still was showing that I have the shortfall, my next thing would be, let's look at who's stealing hard drives out of the warehouse, because that's what I would assume is happening, is that somebody's taking them out the back door.
Right. But then would you eventually like to fix the hole? Like you would have to make some kind of correcting. You'd have to correct the books somehow, right?
Oh yeah. Because at that point, I mean, even if I'm assuming that they're going out the back door, I would go, oh well, damn, our inventory is far less than what we recorded on our books. So I mean, the right thing to do at that point is to go, we made a mistake. Let's restate our financial statements
and write down the
to
inventory.
Show our actual inventory, which is less, and our profits, our net income, which is also less because of that.
Right. Gotcha. Okay. Yeah. See, those seem to all be perfectly reasonable courses of action, Greg.
Thank you.
Do you want to know what the MiniScribe people did?
I absolutely want to know what the MiniScribe people did. That's my whole purpose for living right now.
Okay. Well, at first, some of the executives wanted to charge part of this shortfall in the inventory off to their inventory reserve account. And then they would, book the rest of it to cost of goods sold, to true up the cost of goods sold,
Gotcha.
right?
And
Makes
an
perfect
inventory
sense.
reserve account is basically an account that you have that says, hey, some of our inventory is going to get damaged or get lost or get stolen. That
won't be suitable for sale. Yeah.
For one way or another,
Right.
inventory, there's shrinkage of your inventory between what you actually create and what actually gets onto, delivered to your customers. So that's what your reserves are.
Right. So this idea was proposed to Schleibaum, the CFO, and he did not like that idea.
Okay.
So instead, they just made some numbers up.
Right. And Schleibaum's gotta not like that, because like we said earlier, a lot of their compensation, their bonuses, whatever, was tied to them hitting these numbers. So obviously he's not gonna like the idea of writing things down, because that's gonna make it so they're not hitting those numbers.
Yeah. So they made the numbers up.
Yeah.
And they inflated their inventory count. And by this time, of course, the auditors were, they were doing their work.
Yeah.
So after hours, a couple of these MiniScribe guys broke into the auditors' files and altered the counts to match their bogus numbers.
Nice. Which again is so crazy, because we're talking 1980s. Because in the 2020s, you say breaking into files, and everybody thinks of something like a hacker at a keyboard, like going, like a Mr. Robot, going, I know them well enough to know that their first pet's name was probably Scruffy, so, something like that. This was like actual, like a file cabinet with a little lock on it, with a little push.
I had a dog named Scruffy growing up.
Did you? For real?
I did.
Nice.
Yeah. Anyway.
Yep. I know all these things. That's why I pilfer money out of your bank account.
Yeah.
Regularly.
But you're right. Like they probably went in there and they had these little Allen wrenches, and they like went into the briefcase and like it popped open, and they must have like shit their pants. They would have been like, "Oh my God, we opened it." And
It
then
worked.
it worked, and then they changed the numbers.
You got
ridiculous.
Here's the thing. This is more likely to me. You've got this group of people that can build a hard drive on a pool table. They're handy guys. So they're going, I can totally pop that file cabinet open. And that's, I think.
I mean, I don't mean to correct you, but the guys building the hard drive on the pool table were not the guys breaking into the auditor's files.
Okay. Well, in my mind, it's the guys. You're right. It's the accountants. Okay.
Sorry to burst your bubble.
No. Good. No, again, that's our dynamic here, where I have these very romantic ideas of how this work, and you're like, no, it was different. You're dumb. I get it.
So they tweaked their books a little more, and their little inventory shortfall problem was no more.
Yeah.
And these numbers were part of the 1986 financial statements package that was filed with the SEC and disseminated to investors,
making them happy, and the world was right again.
Yeah. So then in July of 1987, one of QT Wiles, Dr. Fixit, I think that's how we're going to just say this throughout now.
Yeah.
One of his team expressed concern to him about MiniScribe's Far East operations. So QT, Dr. Fixit, went out to Singapore and Hong Kong to see what's what. And what he found was not good. In our research, it was described as, quote, a complete loss of inventory control in MiniScribe's Singapore facility.
This episode of Oh My Fraud is sponsored by SoftLedger. SoftLedger is a real-time cloud accounting software platform that enables accountants, CFOs, and developers to manage multiple entities, integrate with other systems, and close the books faster. SoftLedger has everything you would expect from a cloud accounting app, like an adaptable GL, bank feed data, automated AP and AR, financial reporting, and cash flow tools. But SoftLedger is more advanced than other accounting packages on the market, as it can handle multi-currency, multiple businesses, properties, investments, subledgers, and SoftLedger is the first full-featured accounting system that supports crypto multi-wallet asset management with seamless integrations to crypto exchanges, giving you real-time transactional crypto accounting and reporting. SoftLedger is fully programmable via their API. This allows your team of developers to create your own accounting functionality or easily connect SoftLedger to other software you may be using. To learn more about using SoftLedger and to get 25% off your first 3 months when you mention the Oh My Fraud podcast, head over to ohmyfraud.promo/SoftLedger. That's ohmyfraud.promo/SoftLedger. So with the complete loss of inventory control in the Far East divisions of MiniScribe, Dr. Fixit removed Schleibaum from his role as CFO, and he put in a new guy named William P. Larea as the acting CFO. And due to this mess, this huge inventory mess, Dr. Fixit ordered an analysis of the inventory, and what was discovered was that there was a, brace for it, $15 million shortfall in inventory, the largest being at MiniScribe's Colorado facility. So after them going, oh, inventory in the Far East is in disarray, then they go, well, we're doing it okay in Colorado. No, absolutely not. It was a mess. And so Dr. Fixit met with his team in the fall of 1987. All they were trying to do was figure out what to do with this inventory situation. And one of his right-hand men, one of his lieutenants, presented him with a report that had a whole bunch of different ideas for how to fix the inventory problem. But none of those ideas were, let's do the right thing and just tell the public that our inventory numbers were wrong. Because if they just came clean and told the public what was really happening, that would have a huge impact on the company's profits. And obviously that would have a huge impact on the C-suite's, their compensation. So what Wiles decided to do is he told his team to continue covering up the shortfall, and then he also destroyed the report that this guy had. So he was basically like, I love your great ideas of doing bad things with our numbers, of committing fraud. So let's do that, and let's burn all of the evidence that we met today and decided to do this. So then, just a few weeks later, Dr. Fixit and his team, they met again, and his acting CFO, Larea, suggested that he was like, listen, guys, what we really need to do is we really just need to come clean, and we need to write off our inventory inaccuracies and just make the books right again. MiniScribe stock price at this point, when Larea suggests this, MiniScribe stock price was already just being beat up because of this huge drop in the overall market. Because another thing that happened in late 1987 was Black Monday, October 19th, 1987, where everybody's stock price was just in the toilet. So there wasn't much more for them to lose. So the idea was, let's write off this shortfall right now while we can, because everybody's in the toilet and no one will really realize that we're even more in the toilet than we would have been otherwise. Seems like a solid idea, doesn't it?
Decent idea.
I think it's a great idea.
Bury the bad news. Bury the bad news
exactly.
and the broader bad news.
It's almost like Black Monday could have been the exact thing that they needed, that they were praying for, to be able to get out of this shitty situation. But Dr. Fixit refused. He said, hell no, we're not doing that. So in November 1987, Dr. Fixit and his team reconvened once again, and it was at this meeting where Dr. Fixit suggested that they write off the inventory shortfall, not all at once, but over 6 quarters, so over 18 months, and that they would start doing it the first quarter of 1988. And Dr. Fixit insisted that everyone get on board with his brilliant plan.
So, Greg,
Yeah.
maybe people know, maybe they don't, but maybe you can explain to me what's wrong with this idea. They're still going to write it off. He's just going to do it over the course of 18 months. Tell me why that's why that's wrong.
Well, the whole thing's wrong because the numbers are inaccurate. So,
right. And so is there a principle? There's an accounting principle that kind of like underscores all this, right?
Well, yeah. There's two. There's the main principle of report the right fucking numbers. That's the main principle.
Okay.
That comes to my mind. But also there's I think you're alluding to the matching principle that says that when you the same period that you sell the inventory, that's when you have to report it as cost of goods sold. So they're absolutely, they've been violating the matching principle from the first time they noticed that their inventory was off.
Right. So just in case and I know we have some non-accountants listening out there. So this is why somebody might be thinking, well, that sounds okay. I mean, they maybe should have done it right away, but now they're trying to do the right thing, but he's trying to do the right thing in a very wrong way.
Right.
And it's not even really the right thing, right? Because the right thing would just be to write the whole thing off all at once and just like start all over.
Yeah. And the hope, I believe, and this is me kind of reading into the motivations of the MiniScribe team, I've got to assume that the hopes are, hey, we're going to have our next 6 quarters are looking very, we're very optimistic about the results that we should be getting in the next 6 quarters. So if we write off this inventory shortfall shortly over those next 6 quarters, it'll probably be buried and no one will notice it anyways, and we'll be back to square one. And at that, so instead of following the matching principle, they're following the no harm, no foul principle, which that's not something they teach in accounting school.
Right.
So,
but there was still a problem, huh?
There was still a problem, and that problem was MiniScribe's 1987 audit and how they were going to cover up their inventory problem to Coopers and Lybrand, who their whole job was to make sure that the numbers reported in the financial statements reflected the reality of their company, and the reality of their company was not good.
So in December of 1987, Wiles and his team came up with their plan for the
Who's
for the
Wiles?
Dr. Fixit.
Oh, right. Dr. Fixit.
Dr. Fixit. So they came up with a plan. MiniScribe rented a huge empty warehouse in Boulder, Colorado. And on December 18th, 1987, several of Wiles, Dr. Fixit, several of his team, they gathered at the warehouse. Wiles, Dr. Fixit wasn't there. Dr. Fixit wasn't there. And this team spent that day, 1 week before Christmas, packing 26,000 bricks they had purchased from the Colorado Brick Company into boxes. They loaded those onto pallets. They shrink wrapped those pallets and loaded them onto trucks. Why bricks, you ask? Because the weight of each brick pallet was basically the weight of a pallet of disk drives at that time.
That means disk drives are heavy as hell.
Yeah. Well, I mean, and bricks aren't as heavy as you think, right? Like when you pick up a single brick,
okay,
it's like, oh, that's a brick? It's lighter than you think, right?
Yeah, yeah.
But anyway,
good point.
So then they moved these trucks up to Larimer County, which is, north and east of Boulder, and they booked these bricks as in-transit inventory worth approximately $4 million.
So they basically said, hey, here's a bunch of boxes of disk drives. Here, lift it. It feels like a box of disk drives, right?
Yep.
And then they're like, but I mean, so it feels right, it's labeled right, and it's shrink wrapped, so you don't want to have to cut through the shrink wrap.
You don't want.
So
you can't unwrap.
I mean,
these.
it's disk drive. It's hard drives. Don't worry about it.
Yep.
Nice.
2 of MiniScribe's buyers of disk drives agreed to quote unquote refuse the shipment. MiniScribe then reversed the sales and added the inventory back.
Yeah.
The team also employed other means of plugging this inventory hole, including recording a shipment of non-existent inventory to its Far East operations, packing scrap as inventory,
which is
double
like,
counting. Yeah.
That's basically bricks again, just the bricks are shitty hard drives.
Yes, that's exactly right.
Yeah,
yes,
packing
right.
the scrap. Yeah.
Yep. Double counting inventory.
Awesome.
And not booking any accounts payable upon receipt of some of the materials.
Okay.
And so this kind of maze of accounting maneuvers would make it pretty hard, I think, for auditors to detect anything suspicious. Because like they'd just be, I don't know, correct me if I'm wrong, Greg, but like it feels like with all these different things going on, the auditors will probably just at some point be like, well, it's real complicated and within our immateriality threshold or whatever, you know.
Yeah.
And they kind of use the knowledge of like how auditors work to kind of like get them to chase their tails a little bit and just kind of like throw up their hands probably at one point.
Yeah.
But it's, and again, they'd probably, you know, the auditors would probably just make notes of all these things and say, this is a high risk area, but we feel all right because we saw the shrink wrap pilots.
Right.
And
they were diversifying their fraud portfolio is what they were doing.
Exactly.
So
as a result, MiniScribe had inflated its profits between 15 million and 22 million bucks.
Wow.
And QT Wiles, Dr. Fix-It, his announcement to stockholders in MiniScribe's 1987 annual report stated, quote, "We achieved the best results in the company's history and now have 10 consecutive quarters of increased revenue and earnings. 1987 was a great year, and the outlook for 1988 looks even better."
What a dick.
With a straight face.
This episode of Oh My Fraud is sponsored by Patriot. Patriot software creates accounting and payroll software that radically simplifies the day-to-day complexities that American businesses and their accountants face. Patriot is seamlessly integrated under one login, easy to use and affordable. And they rank #1 for ease of use, customer support, features, and value for the money by users. Patriot's accounting software is a cloud-based, full-featured accounting general ledger that gives your clients the simplicity they need, but the power you require. Patriot has patented dual ledger accounting so you can quickly switch between cash basis, modified cash basis, or accrual accounting, and a chart of accounts that can have unlimited sub-accounts and nest up to 8 accounts deep. Patriot's payroll software lets you run payroll in 3 easy steps, offers free 2-day direct deposit, and their full-service payroll offers a tax filing guarantee. Optional payroll add-ons include Patriot's HR software to maintain paperless employee files, manage company documents, and generate required compliance reports. And Patriot's Time and Attendance offers an employee portal for manual hour entry or time punches, custom overtime rules, and a seamless integration to Patriot Payroll. Accounting professionals can partner with Patriot and receive discounted pricing that increases as you add more clients, support located in the USA, free co-branding, and free accounting and payroll for your firm. Join thousands of accounting professionals who trust Patriot with their clients' accounting and payroll and get a 30-day free trial. Head on over to ohmyfraud.promo/Patriot. That's ohmyfraud.promo/PATRIOT. So as planned, MiniScribe began writing off their inventory shortfall starting in 1988, according to Dr. Fix-It's plan. $7 million over the first 3 quarters, Dr. Fixit planned to write off $3 million in the fourth quarter, and then again in the first 2 quarters of 1989. But due to market conditions, he wasn't able to write off as much as he wanted because, like we said, I think that validates my assumption that he probably really did think 1988 was going to be a bang-up year, and so was 1989. It wasn't as bang-up as he wanted, so he couldn't write off as much as he had intended. And so,
yeah. One thing, if you look into the research, a lot of what was going on at that time, like disk drives, remember this story started in 1980, right?
Yeah.
So 8 years on, the market is maturing a lot and it's starting to soften a bit. And so things are not great. Like, they're obviously, computers are still being made and sold and they still need hard drives, but it's just gotten to the period where there's not this rapid, growth anymore.
Yeah. That which makes sense.
Makes sense. Yeah.
Yeah. And so at the end of 1988, they had written off $7.6 million instead of the $10 million that they had planned to write off at that point. Like you said, hard disk drive market was in a slump at this time. And because of that, MiniScribe's problems started to compound. For instance, one of its lenders, the Bank of America, refused to give the company an extension on its line of credit, which was a $35 million line of credit, and it was maxed out. So Bank of America is like, we're good. You got to pay that line of credit back. So because of that, Dr. Fixit went to Standard Chartered for money. Standard Chartered, another bank that doesn't exist now, I don't think, because I've never heard of Standard Chartered.
It's a UK bank.
It's a
big UK bank.
And now that you say that, Standard Chartered sounds so British to me.
Standard Chartered, and it's Standard Chartered, and yes, it's very British.
Yeah, Standard Chartered. And in July of 1988, Standard Chartered, they were good with it, and they extended MiniScribe $90 million in a line of credit based on its financial statements, which were bullshit. And MiniScribe used $60 million of the $90 million of that line of credit just as working capital. So they were using 2/3 of this gigantic line of credit just to pay the bills.
Just to keep the lights on. Yeah.
Just to keep the lights on, which that's not what you do with a loan, but that's what they were doing with a loan. Even a line of credit, you're not supposed to do it just to pay the bills. So Standard Chartered also satisfied MiniScribe's outstanding debt to the Bank of America in September of 1988. But when Dr. Fixit asked Standard Chartered for even more credit later in the fall, and in early 1989, Standard Chartered said, hell no, but like in a British way. So like, no thanks, chap. I don't. So then in December of 1988, Dr. Fixit, it seems like he finally just had enough of his own BS and had a bit of a change of heart, because he went to one of the board members of MiniScribe, a guy that he had informed. So Dr. Fixit had informed this board member about the inventory problem that MiniScribe had and was trying to deal with. And Dr. Fixit was like, dude, MiniScribe just needs to take a $40 million hit in the fourth quarter of 1988. Huge hit to land in a single quarter. Huge.
Yeah. And in the research, if I may, I can add some color here.
Yes, please.
Like. So the person he was telling back was the Hembrecht of the Hembrecht and Quist, the bank. He was the chairman, and he knew about this problem. And by this time, as you imagine, like as we pointed out just a minute ago, if they're using $60 million of that $90 million line of credit for working capital, like that means like things are going bad. Like they're basically just like trying to keep up paying vendors and stuff. And like, remember, they're manufacturing something, right? So like the supply chain is probably really close to like breaking down and shit. And so it's probably getting real hairy right about now. And that's probably,
Yeah.
that's my hunch. I'm speculating a little bit here, but my hunch is that Dr. Fix-It was just like, okay, this is how we fix it now.
Right.
And
well, yeah, like he finally was like, and this is me reading into it and a bit of speculation, but I think that this is the point where he was like, with all frauds, where you go, okay, this is unsustainable. And his solution was, okay, since it's unsustainable, we just need to call it and take our lumps and deal with that. But then we have this weird kind of power shift, because the chairman of the board at that point says, oh no, we're not taking a $40 million loss in one quarter. And so instead, they still did report a loss, but it was 14 million rather than 40 million. But the rest of the board, it was just this one board member. Who was it? The Heimlich? What was his name?
it was Hembrecht, right? And so here's the thing about that. The reason he did not want to do the 40 million write-off in that whole one quarter is because, as you just said, none of the rest of the board didn't know about this, right? And his fear was that if they reported the entire loss, if they did the entire write-down in that quarter, he was afraid that the whole board would have resigned. And then you've got that's a disaster, right? I mean, we've still got a pretty bad mess, but his thought was like it was going to become catastrophic,
right?
If they would have reported that, because then you think about the board, right? Think of the board and be like, hey, we're board members and we're smart business people and we're in charge we're the ones that are actually in charge. And then it's like, oh, by the way, this quarter we had a $40 million loss, and the board's like, this is the first I've heard of this, and so everybody looks real stupid, right? Yeah. And so they're like, well, I won't stand here and be embarrassed. Right. I'll just quit.
Right.
Which, I mean, you can imagine that's kind of, what's happening in his imagination. Right?
Which I'll tell you, that's a legit reason for people to aid and abet fraudsters, is because they're embarrassed that fraudster was able to perpetrate a fraud on their watch. It's a weird dynamic, and I've seen it firsthand before. And it's bizarre, but it's very true. So with Heimlich not wanting the rest of the board to resign, he did the $14 million loss instead of the $40 million loss. But instead, in early 1989, Dr. Fix-It resigned. He was like, "Hey, this is a sinking ship. I can't do anything. So I'm just gonna walk away from this mess, this giant stinking pile of crap that I created." So in February 1989, Dr. Fix-It bounced out, and his successor, a fella named Richard Reifenberg, he obviously came in and he learned about the inventory problem. So he ordered a comprehensive analysis of what happened, and Reifenberg found out that this was a gigantic mess. He learned, as the new guy, the actual size and scope of the inventory problem, and so he ordered an independent investigation into the inventory shenanigans. And as a result of that, in April of 1989, MiniScribe issued a press release that informed the public that their past financial statements should not be relied upon. And in December of 1989, the company released corrected financial statements for 1986, 1987, 1988, and the first half of 1989. Basically, a huge chunk of their history was all rewritten. And in early 1990, MiniScribe filed for bankruptcy, and its stock was delisted from the stock exchanges.
So shortly after the bankruptcy, MiniScribe's assets were purchased by Maxter, a competitor, for $46 million. Maxter went on later to become acquired by Seagate. But yeah, they assumed the assets. They did not, of course, assume the liabilities. Right. That independent investigation ordered by Richard Reifenberg, they released a report in September of 1989 that alleged that MiniScribe's executives had perpetrated a massive fraud.
What?
And yes, can you believe it? And one of the good quotes from the reporting at the time was, This fraud was all the more alarming in that it required the active participation of many company personnel and was apparently common knowledge among a great many other employees." End of quote. Of course, a flurry of litigation ensued, with a finding against Hambrecht and Quist and Coopers and Lybrand in February of 1992 for $550 million. However, that was quickly overturned, and the reporting around that, there wasn't a ton of reporting around it, so it wasn't clear as to why it was overturned so quickly. But then they settled out of court, and a grand jury indicted QT Wiles, Dr. Fixit, and Patrick Schleibaum. They were both indicted. They were indicted separately, but they were both indicted in March 1993. Schleibaum was convicted in June of 1994 and sentenced to 2 years in prison. And Dr. Fixit was convicted of fraud and other insider trading in August of 1994 and later sentenced to 3 years. So, Greg, did we learn anything?
Yeah, I learned several things, one of which was, once again, learning that inventory is the refuge of perpetrators of financial statement fraud. I wouldn't say that inventory is easy to manipulate, but if you are motivated enough, you definitely can manipulate inventory. And because auditors aren't getting, like we said, an inventory audit, they're not counting every last single item of inventory.
Right.
They're not going to open every box. They're definitely not going to open every shrink wrap box. And so the shrink wrap box with bricks, very creative. These guys win an award for creativity. But yeah, bricks in a shrink wrap box, that's going to go a long way. And it's creative, and it took a lot of work, but it got the job done for what they needed to do. I also learned that this has been very interesting because we see it specifically in financial statement fraud, is that hordes of normal good people, just by being normal people, end up being accomplices in financial statement fraud. So and I know that some of the executives were involved in the bricks and the boxes, but when you think, there had to have been other people involved in that as well. So like,
wittingly or unwittingly, right? We
But
saw it in the Crazy Eddie story too, right? When we were talking to Gary about that, is like, like you say, good people just get caught up in these things, and it's just like, what the fuck is going on? And it's like, okay.
But I would almost say that it's not even wittingly and unwittingly, almost becomes a non-issue, because what really is at stake is your boss comes to you and they say, hey, here's what we're doing today. We're putting bricks in boxes that are labeled hard drives. We're putting some shrink wrap around them.
And there's a very good reason for this.
We're putting in the truck and we're driving them to Fort Collins. And so you're just an employee and you go, okay, so I guess today we're putting bricks in boxes, we're shrink wrapping them, and we're driving them. You just do, if you're a good employee, you do what they ask you to do. And you might think to yourself, and this is where, complicit or not complicit comes in, because you might, at best you're going to go, well, this is a weird thing for them to want me to do. And maybe it's almost like, this seems kind of fishy, but you also, it's easy to shrug off like response. You can easily defend your actions, go, I was just telling me what my boss told me to do and I didn't want to get in trouble. And then you're off the hook. So you go, okay, this seems weird. This maybe seems fishy, but it makes my boss happy and I'm getting paid. So let's shrink wrap some bricks, bitches. And that's how it goes. So it's just, it's weird to me. Like I said, that because usually one of the main tenets of like internal controls is that it's harder to commit a fraud with more people. So part of internal controls makes it so that you would have to have collusion amongst multiple parties to commit the fraud. But in some of this financial statement fraud stuff, collusion's even kind of out the door. It's just sort of like, we're just doing what we're told to be doing. And, we're not, and maybe even part of the corporate culture is don't ask questions. It's none of your business. Just do your goddamn job. So it's weird how many people can have their fingers in this fraud. Like I said, even though there's not really that aspect of scienter that I don't think we've talked about, like the intent to defraud is not there with all of these people, but they're obviously aiding and abetting it just by doing what they're told to do. Very interesting component of these financial statement frauds specifically. And then the last thing, I don't know if this is really something I learned, but it's maybe more under the umbrella of just some speculation. But one of the themes that we see in financial statement fraud, and really it's kind of a theme just in fraud in general, is this idea that they're going to commit this fraud just to help them get through a rough patch. It's like we had a bad year, and even in this case, because correct me if I'm wrong, Caleb, but the shortfall in inventory was just it was just a mistake at the beginning. There wasn't it wasn't intentional to say, hey, let's understate or let's overstate our inventory, right?
I mean, I didn't see anything that suggested that there was, chicanery going on with that initial shortfall, right?
Yeah,
like they were doing a routine examination of inventory, and like say, it's like, whoa, this is way off.
Right.
And you're just like, how does that happen? Well, any number of ways, right?
Sure.
Like businesses are complicated. But what you do from there is the important thing,
exactly.
Right? It's like, well, do we suck it up and like take the hit, or do we double down and just be like, well, let's just let's figure this out.
Yeah. Well, and that's the thing. And so kind of the justification that and this is the speculation part, the justification that I'm speculating that they have is, okay, like specifically in the MiniScribe case, they go, somebody, we don't know who, and maybe it was a whole bunch of people, just totally fucked up our inventory. So now we're dealing with the reality of these totally fucked up inventory numbers. So they say, what do we do? And they go, you know what? Let's just fake it until we make it. We'll just say the numbers are right, and we're going to make it up because we're a solid company. Our business model is great. Our product's great.
Yeah.
We'll have great quarters then. So and this is the theme that we see, not just is that's kind of a general, mindset of a lot of fraudsters getting into it, but then that compounded with the fact that things never really bounce back. They don't get the turnaround that they were expecting or hoping for. So then they have to double down on this fraud that they thought was just going to be a one-time thing, a one-quarter thing, a one-period thing, and then get over it. And so, with MiniScribe, they hatched a plan even to try to right their wrongs, but they couldn't do it because the market never helped them to right those wrongs. But, and again, back to the speculation side, there's a lot of me that's got to assume that there have been some companies that have dabbled in some pretty hardcore fraud, but the market did bounce back and it did help them out, and they were able to get back on track and go, oh, phew, our little lie was just a little lie and it's buried in history and it's never going to come to light. What do you think? Do you think that happens? Do you think that kind of no harm, no foul fraud exists?
Sure. Oh my God. It's going on probably right this minute.
Okay.
You know what I mean? It's just like, when you think about like channel stuffing, right? Like that's one of those things. And for folks that don't know, like channel stuffing, and keep me honest, Greg, because I don't do the accounting anymore, but channel stuffing is one of those things where they try to like basically stuff the period with additional sales.
Yeah.
Right. So that they can make a number.
Yeah.
But they're recognizing the sales improperly when they should be recognized in a future period where it doesn't help them make their numbers in the current period.
Yeah.
Right.
Yep.
And so a lot of times you can just imagine like a company just channel stuffing, and then like next quarter comes around, it's like, well, that's in the past, and they just reverse it all out or whatever. Yeah. And it's just like, and like you say, the market comes back or they have a good month or whatever. Right. And it's like, hey, everything's good. And they just move on. I mean, it's got to happen all the time.
Yeah.
All the time.
Yeah.
Like,
Yeah.
I mean, when you just think of like in like this situation where they're talking about high pressure sales environments, or you have just high pressure management structure where it's all about making the numbers.
Yeah.
Like it's everywhere. It's everywhere.
Yeah. Yeah. So I can see that because, a lot of times, like when the classic channel stuffing scenario is where you go to a one of your customers that you have a very close, a long-term relationship with.
Right.
And they say, hey, is it okay if
do a bulk order
if we
or
bill
whatever.
you, like we know that you're going to buy
Or bill you early,
this many
that's right.
units next year. We're just going to bill it for you on December 31st so that we can book it in this last year. You don't have to pay for it until when you normally would. And then that person ends up selling twice as much of your stuff as they thought they were that year. Then that's kind of the no harm, no foul fraud. But it's still fraud and it's still wrong, and you're not supposed to do it because there's plenty of time. I'm going to say more likely than not, you're not going to dig yourself out the way that you think you're going to dig yourself out.
Right. And I guess as far as learnings go, I kind of think about some of the stuff we've talked about in terms of like behavioral economics or whatever. Just the psychology of like, Dr. Fix-It, he thought he had the perfect plan.
Yeah.
Right. He thought that he was going to be able to write this off over the course of 6 quarters. But you know what? That's the planning fallacy, right? Like you underestimate the chances of things going wrong.
Right.
And in this case, everything went wrong. And so he couldn't do what he wanted to do. So his plan wouldn't work. And like, that's a pretty oversimplified way of thinking about it, maybe, but it's essentially that's, the psychology of just assuming that everything will go according to plan.
Yeah.
When we all know through just basically our own experiences in life in all kinds of different ways, most of the time, nothing goes to plan. Right. So, and like, that's the risk, right? Is you, like you're talking about how, we're going through a tough time. We'll make it up the next quarter, the next year, whatever. Everything has to go perfectly for that in order to work.
Exactly.
And more often than not,
things don't go perfectly.
Things don't go as planned.
Yeah, exactly.
Right. And I guess the other thing that for me, I think, and this is an easy one, so if you're taking the CPE quiz, tone at the top, right? Like this guy Wiles had a reputation, he was a fixer. He was a hard charging management style, like a lot of pressure on the numbers, just creates the perfect environment for corruption and fraud. And like, it's just, I don't know, it's as old as the crucifixion, as they like to say, just that's,
do they like to say
maybe,
that?
I don't know. Maybe it's not that old, but that kind of environment, when you have those ingredients,
it's as old as the Commodore 64, at least.
Yeah. Right. So in any case,
and that's true. And auditors actually are supposed to take that into account. If executive compensation is based on the financial statements, that's a huge red flag for risk that those financial statements are misstated. And and when they're in their mandatory meeting to brainstorm how and why fraud might occur in a company, if executive compensation is based on financial statement results, that has to come up as something that's like, okay, we got to make sure that this, but again, that's part of the brainstorming. But then if they go, okay, so what do we do? Check the inventory like we always do. Yeah, let's do that. So it doesn't help a whole lot just to know that that's the case. Well, that's it for this episode. And remember, never take out a 5 1/4 inch floppy disk out of the disk drive when that little light is green.
And also remember, never trust anyone who calls themselves Dr. Fix-It.
If you want to drop us a line, send us an email at ohmyfraud@earmarkcpe.com. And Caleb, if people want to reach out to you, where can they find you out there in the internet?
I'm on Twitter at CNewquist, and my LinkedIn is /Caleb Newquist. Greg, where are you on the internet?
Same thing. Twitter, I'm at Greg Kite, and LinkedIn /Greg Kite.
Oh My Fraud is written by Greg Kite and myself. Our producer is Zach Frank. If you like the show, leave us a review or share it with a friend. Rating the show and leaving reviews help other people find it. So do that. Leave a review. Write something nice.
5 stars.
Or not nice. We prefer the nice thing.
Yeah.
5 stars. Also, to be sure to subscribe on Apple, Stitcher, Spotify, or wherever you listen. And for the accountants out there, if you listen to the podcast on Earmark, you can earn free CPE.
Nice.
Better than a brick.
Better than a box full of bricks in shrink wrap.
Join us next time for more avarice, swindlers, and scams from stories that will make you say,
"Oh, my fraud."